Righto, money miners, welcome back to another week. The markets are just bloody spinning in turmoil. The only thing that probably could detect which way it's going is a north-seeking gyro of Axis mining technology. That would give probably the most accurate representation of the future of anything as the trusted advisor for drill hole survey instrumentation.
There's something to this, Matty. The Money Mine Pod's going to employ one of these to get some alpha.
Oh,
these tough times. Gyro for
cool,
the markets.
Cool, you later, Lee.
Good for the geos, good for the drillers, good for just us.
We're going to talk about a $24 billion bloody buyout briefly today, and this could be the next one after we get our hands involved. Boys, what's going on? We've got a bit of a raw dog episode again of a bit of everything. A couple of omissions and inclusions for the ASX 200. One notable one that we discussed last year.
There's a few there. I mean, there's
one notable one based on the context of it, I think. Yeah, which is pretty cool. I think.
Yeah, totally. And there's like a couple of often the ones that go in the index and out of the index. I reckon resources stocks have a big representation in them because they're cyclical and things look good and then they're not. So quite often those like the ones that go in and out and get spun out of resources stock. So I'm going to talk about all of them.
Yeah, very good. Boys, you're taking the bull by the horns on the uranium again.
The deal.
There's a vote on tonight for the Fission Paladin deal and a couple of variations from some court orders and stuff. So that's going to be extremely interesting. I thought I'd collate together some of the comments I've heard about WNA from a lot of the media sources out there that were there. So just see what bloody much of the same. But
it's as good as eyes on the ground is having you tell it secondhand.
Oh, pretty much. It's like I've been there effectively and Predictive.
Yeah.
Perseus.
Yeah. I mean, like this was Friday. But
up the bloody bit.
Going to talk a bit more about that.
Up the chunk. Yeah, very good. Right, leader away, boys. ASX 200 inclusions, the rebalances. Who's in, who's out, what's going on?
It's interesting, I reckon, like just how stocks trade around the announcement of, the S&P index rebalancing. Like, I'm still trying to learn a bit about, these events to see if they're kind of largely priced in. Are they, do people know ahead of time? Have they done the numbers? Do they know that certain like stocks are going in the index and therefore is it already priced in or not? Like I'm just still kind of confused around all the trading dynamics around these index inclusions or removals, and I'm fascinated by the strategies that the hedge funds around a rebalancing kind of employ. I think like if they anticipate it's going to go in, they'll buy it beforehand. They'll sell it into the event, and hopefully make some some margin in the process. But I'm still trying to figure out how all that works. And the stocks that will be added to the ASX 200 and 300 were announced late last week, and so today's the first trading day since that announcement. The resources stocks added to the ASX 200, we've got two of them. Firstly, Westgold. Now if you remember in their proposed deal or merger with Karora, a huge selling point of that combination, because it didn't have synergies, was the fact that they'd get this, enhanced index ETF passive money buying because they'll probably be eligible for the ASX 200. Well, here it is. What
are you talking about? There's $500 million of synergies if you read the dog.
Well, at least that selling point is there's truth to it because they're being added to the ASX 200. And then the other one is Yancoal. Ding, ding, ding. I own this stock. So Yancoal, this is an interesting one because they're a big market cap company. I think they're sort of top 80 kind of by market cap on the ASX, but they've remained outside of the ASX 200 and even the 300 because they've never had sufficient kind of free float to be eligible for index inclusion. And in the last quarter gone, their second largest shareholder, Cinder, they sold down a little bit more, and that kind of gave them sufficient free float to finally get this index inclusion. So they'll be added not just to the ASX 200 but the 300 kind of at the same time.
Yep.
And grounding out the changes in the 200, one resource stock is being removed from the index, and that's Strike Energy. And I think there's an interesting conversation for us to have at some point about the companies that slip into the ASX 200 when they aren't quite ready. And when they aren't quite ready, that they don't go in with enough momentum, or they're not growing fast enough, or they kind of get in on dubious reasons or whatever. They often just get spud out in 6 months or a year's time or whatever. And one observation I would make is it kind of gets pretty ugly for these companies that get spud out sort of because they prematurely got put in. Strike Energy sort of fits that category. They've had a pretty tough year. ever since kind of going into the index. I think, year to date, they're down like 63%. And like, other companies you can just think of when they're spun out, like, think of Chalice's chart, think of Sayona, Lake. I mean, there's heaps of them. They're often like these, retail stocks or whatever, and they kind of get bid up and get big enough and go on the index, and then,
it's a virtuous cycle on the way up and the same thing on the way down.
Oh, yeah, and like on the way down, like they're obviously getting removed because they're gone down.
Yeah.
But then as soon as they're removed, all those shares have got to be dumped as well.
100%.
Taken away from the ETF hold. So it's like a double. You've already gone down, but you might go down more because of the extra selling pressure.
100%. Like that's a good point, because you get spud out, and then some, these ETFs, the passive money, they still own a decent chunk of the shares, right? Like, whatever the Vanguards of the world or whoever, they still own, a couple percent, and they're kind of mandated to, progressively keep selling at a time when there's probably, like, where are the buyers in some of these situations? Because the tide has turned. The retail that bought on the way up, they ain't buying it on the way down. And kind of takes a lot for the instos to get kind of excited again. So
there was an expression that I used to love in the dealing room when someone would ask you, why is the stock down? And they'd just say, more sellers than buyers.
I'd love to know about, like, when you're getting in the ASX, the 200 and 300 ones, it's probably especially the 200 in comparison to when you hear the Goldies getting in the GDX. Like, I remember, like, there was talk Bellevue are about to be included, where they're going to buy all these shares from. It's tightly held, and probably a case again where you said it might have been priced in because it didn't really do anything upon index inclusion.
Yeah.
But I assume the ASX 200 would have a lot more ETF money behind it compared to the GDX and the GDXJ. Yeah. So there's a lot. Yeah, there'd be a lot of things that have to buy for the ASX 200.
Yeah. And I was going to say, if you think of like the proliferation of the pod shop investors, right? Like, we've all heard about how massively these pod shops are growing. Well, each pod shop, so like Millennium's growing massively, blah, blah, blah. But the way Millennium scales is, each individual pod has completely independent strategies from every other pod, and no one crosses notes. So like all of these sort of rebalancing events are opportunities for, these pods to basically seek out alpha, and they'll try and do the numbers and I think anticipate it by ahead of time and then sell into the event. And so net, you kind of don't get these kind of crazy price changes because someone's trying to capitalize on these, rebalancings ahead of time. That's my dumb interpretation of it, but I'd love someone smart.
And the fundies I've spoken to, they're like, it is their job to know when things are going in and out before, like, they don't trade it the day before. Like, that is what they do. They just literally trade stocks every day.
Yeah.
Regal's another name that comes to mind. There was a big write-up in the AFR not too long ago about them strategizing, picking out index inclusions. And this obviously hits companies that have less liquidity way harder. So there's much more room for volatility if there's just less shares traded, perhaps a smaller free float, or, you've got directors, founders, whoever of the company not trading their stock as much, then there's less to buy, moves the stock even more.
Yeah, and I think interesting, like Westgold, if speaking about them specifically, like whether it's priced in or not, you look at they've kept going. They were up at $3. I don't know what they are today.
Yeah, well, that's in my quest to try and figure out, are these events priced in or not. Let's look at compare Westgold with Yancoal, right? Watch the Spark replay on Open, down 3%, which is pretty interesting. Compare that to the Spark replay of Yancoal on Open, up 3%. Yeah. So one went up 3%, one went down 3%, which basically leaves me with no takeaways about index inclusions being priced in or not because they went in different ways.
Would you argue maybe the Yancoal one wasn't the Westgold one was known probably that was going to happen, whereas Yancoal was like, once I read it, oh shit, like that would have been a very hard one to gauge.
Yeah, there was ambiguity about whether there was enough sold down, and I think the actual inclusion calculation requires. I think it's like, there's a liquidity threshold, and so that requires a bunch of volume to be done on the ASX, not the other exchange where they're on. So I think there was ambiguity about if Yancoal would get in, and if it also would reach enough for just the 300 or the 200 as well. But there you go. It's it probably did catch people off guard, and it came off 20% because they didn't pay dividend. Keep in mind as well, so they might have been primed for a surprise to the upside as well. I don't know. I'm getting into the realm of technical analysis now.
It's not a carton. And I'll be so interested to follow this Yancoal story in the next 6 months about the potential M&A, what role FIRB plays in that M&A as a even though it's ASX listed, it's a Chinese-owned stock. Like that's going to be fascinating, I reckon. Whatever happens there.
Yeah, and zooming out on the 300, there was a good few movements as well that you picked up on.
Yeah, exactly. So if you just look at added to the ASX 300, you had Yancoal, obviously, WA1, Spartan, Capstone, Copper, ding, ding, ding for a couple of those names for JD and myself. Getting the flick, Core Lithium, Grange Resources, Renascor, Talga, and Terracom. So, I think like one day I'd love to interview someone who can break down the strategies around sort of, these index additions and removals. And I'd be fascinated to go, deep into the broader impacts even of passive penetration on our capital markets. I personally, subscribe to the view that these passive strategies and the growth of passive strategies, has had some wacky impacts on stock markets, and as a result, there are interesting opportunities for active investors, and punters alike too, if you can, introduce it.
I think if anyone's retired from funds management and doesn't care about sharing secrets, come give us a buzz. That's the hardest thing to get the info like this. They're like, well, I can't tell everyone. Everyone will do it otherwise.
Capstone's an interesting one, right? Because if you look at the whole market cap, it's almost the size of Yancoal. It's a sort of, I think, $7.5 billion company.
Yeah.
But only a portion of that is on the ASX.
It's all about the ASX.
Yeah, of course.
Yeah. The CDI, But I reckon, speaking of the 200, another inclusion, I reckon VRIFY might even IPO into the ASX 200 just straight off the bat.
Straight into the ASX 50.
Let's not stop at the 200.
No.
ASX 20.
But the AI is bloody booked out. VRIFY AI, booked out. Mate, it's like getting kids into a private school. Like, it's bloody, you got to get in line to get a piece of this unbelievable tech. And the bloody, without the OG, along with the OG bloody VRIFY tech, coupled with the AI arm of the business, boys, they could even they're probably going to start building their own data centers and nuclear reactors to support all this bloody AI. This could be the biggest tech company to IPO if they choose to do so. Like I mentioned it at the start. Yeah, the Air Trunk got taken out for $24 billion cash by Blackstone.
Yeah.
They're cloud compute and AI after 9 years in operation.
They weren't publicly listed, Matty, so VRIFY could get the takeover without even IPOing.
There's options. Yeah, you could IPO, you could get $24 billion this way. This is where VRIFY's heading. I just feel honoured to be on the journey with them. Give them a buzz. Grant at verify.com.
That'd be a laggard. Get on it.
Oh, mate, you don't want to have to send your kids to public schools just because you didn't take action to get them enrolled when they were in year one. Like, you know what I'm saying? Like, think of it that way. That's how you should treat VRIFY. Right. The Fission Paladin vote, which has been extended to tonight, which was previously going to happen earlier this month, I think it was, or late last month, sorry.
Yeah.
Got extended. Word on the decline was they couldn't get the votes, was the most likely reason. Can't confirm that. But what's going on? We're in a talk about, as you said to me the other week, Trav, shit markets are real bad for M&A. To get over the line.
Volatility's hard, yeah. Just you need stability, yeah. But
well, I suppose, if it goes the other way too much and rises, they're like, no, we'll keep it, thanks.
Exactly. But volatility and time kill deals.
Yeah, absolutely. So I think you're spot on, Matty. The clear reason why, one would assume that the deal vote didn't go ahead at the end of month was that they couldn't get the vote. So kind of interesting to your point there, Trav, on the volatility. Got a little chart here which indexes the stocks together. You can kind of get a gauge of the relative performance. So they've both come down markedly over the past couple months. Fission now trading around 74-75 cents. They were $1.35 just a couple months ago. And Paladin, they hit a high of almost $18 about 4 months ago, now trading at $8.50. So both of them are off a long way. And to put it in a bit of context, we'll just chuck up a chart of the Sprott Uranium Miners ETF. Now you can see that's also come off 35% since May. So the whole space is getting beaten up.
Yeah. So votes tonight, 10 a.m. Pacific time.
Yeah,
Yeah.
which is 1 a.m. Perth time.
That's right.
Yeah,
Did the,
I'll
did the
chuck an
conversion.
alarm on.
Yeah.
So it's interesting to kind of see how things are balanced and see some of the actions that's taken place over the past few days and past couple of weeks that are, a clear indication that Fission and the proxy solicitors are working hard to get the votes required. So as a quick reminder, they need 66.6% of votes cast by shareholders. They need 66.6% of votes cast by shareholders and option holders classed together. And they need a simple majority of votes by minority shareholders. Now, the record date was July 19th, in case you're thinking, can someone just go and buy them up and get the deal over the line?
I thought one of those conditions, which was the combination of shareholders and option holders measured together, was there a court interim order which basically kind of changed that?
So that is the interesting news that's kind of come about in the past couple of days, and the language is quite ambiguous. So I think we're going to maybe sling out a few more questions than answers right now, but we'll flash up what the newswire that Fission put up says. Now, they got a ruling from the Supreme Court of British Columbia saying it had granted, in and amongst a few other points, that for the exercise of all outstanding options of Fission, such that the holders of the options would become holders of common shares of Fission. Now, that language doesn't mean an awful lot to me. That's kind of confusing. But I think the takeaway is that they are encouraging or perhaps forcing options holders to convert to become shareholders to vote. Now, as a reminder, there was 856 million shares outstanding and 71.8 million options outstanding that were eligible to vote. So there were a few more options, but a few of them can't vote in this one. So I think, rather than getting bogged down in the weeds, looking at what the actions are doing and kind of saying is the better analysis to kind of make. And I think it's clear to me that Fission are working hard to get every single vote that they can over the line.
And it's trying to figure out, right, if they're trying to make all these, if you're wanting the option holders to, because it doesn't explicitly say that those options won't be counted unless they're converted.
No, and
that's the confusing thing.
And the question that people might have is how many of the options are in the money, right? Because you're not really incentivized to convert them if you're not in the money. And you can see from the little chart we'll flash up now, all bar sort of 21 million of that 72-ish million are below the current offer price if you were to sort of convert it by looking at what the Paladin share price is right now. And that, all the in the money ones, if you're just counting them, that would equate to 5.7% of ordinary shares out there right now. So, I mean, perhaps another inference to kind of make is, are they thinking that all the options holders out there, they got the options that have lower exercise prices because they were, further back in time, they're more likely to vote in favor of the deal, and the options holders who picked up the options later that have, a $1.25 price, they're less incentivized to actually exercise them. So they're not going to be voting in favor of the deal. So that would assume that the options that aren't in the money won't be able to vote. And that would be a bit of a change on the original terms. But again, I think we're throwing out a few more questions than answers.
Yeah. Yeah. Oh, I am bloody confused too. I won't lie. And they're effectively saying if those cheaper ones, that if there's people that hold options in the money that have had them for a while, they're saying you can't use them unless you cough up the money right now to convert them into shares for the vote.
And what we do know is,
I wonder if there could be a different mechanism to exercise them where maybe you don't have to cough up the money, but you only are entitled to like there are these different mechanisms. For
well, you look at our
there are if they're in the money, but if they're out of the money, then
out of the money
those ones,
Oh, just say
you just take the difference.
Exactly.
Learned the other one today. The cashless exercise facility. So Raoul Finlayson from Genesis, it took half the shares at zero exercise price effectively, instead of exercising the full amount at the price.
Yeah,
sure.
So
There's sort of
there are these funky.
It's if it's baked in. but when they're granted.
Yeah. So what we kind of did know from about a couple of weeks ago is that they said they had a majority, but they didn't have the 2/3. So they were sort of floating in around, I'd say, a bit over 50%.
And they didn't specify if that was of all security holders or if it was of the shareholders. Like, it was ambiguous which vote it would actually be applying to.
Exactly. And they also said that a bit under half of the securities had yet to be voted. So that did indicate, they needed maybe 75% plus of the votes still to come in to try and pull them over.
Yeah.
They needed plenty more in favour. So to, kind of get into a bit of a discussion of where we think this is going to go, I think it's, paying much shorter odds that the deal doesn't go ahead.
In its current form.
Yeah, given everything that's sort of happened. And that leads to the question, do we think the deal's going to get recut? Do we, are there any other sort of takeaways? How do we think the stocks will kind of react? Have you guys got thoughts on that one?
Well, I think when you say, like, you would think if they were confident they weren't going to get it, I think you said this before, if they weren't going to get the votes, they wouldn't hold the vote. I don't think, would they? Like, wouldn't a recut or something, an improved offer or something, be getting pushed before this vote? Like, they must think there is a possibility.
You see that commonly with the directors who know they're not going to get revoted, and then just 1 hour before they say, I'm not actually standing for re-election. It's all good.
I reckon it'll be somewhat close, but I do agree. Like, I'm not an expert in Canadian plan of arrangements or anything, but in Australia you'll get kind of a recut if things are looking challenging with certain shareholders who have some sort of controlling influence, and then all of a sudden there's this bit of an uplift, and we haven't seen this. I don't know what the restrictions might be around kind of an uplift sort of at this stage in a deal or anything for Canadian law, but I don't know. I don't know. I'm sort of with you, JD. I think it probably looks less likely than likely that the deal will go through in its current state. But could look like an idiot at 1 a.m.
Yeah,
Matty, you're the big uranium fan here. Do you think if the deal doesn't go ahead and they stop pursuing fission, there's another name that they would go after?
As in the
Paladin.
Paladin would go after.
Yeah.
Oh, well, I wouldn't be surprised if this one doesn't go through. It goes back to the one they tried to do in 2015. If Denison come in and try to take fission, which all come out of, like, there's all the links to Denison and all that. So I'm not sure. Like, in terms of Paladin, like, what if they're going for this? Based on absolutely bugger all synergies, unless they're obviously looking to go something pretty decent in size instead of picking up a smaller Namibia. Like, it makes more sense for them to take something in Namibia.
Yeah,
like,
that would be an interesting sort of proposition.
Yeah, so it's like, are they going to look at like who knows, look at like a Bannerman? No chance of getting deep yellow. That's the personalities there or won't let that happen. But yeah, who knows? I thought like Paladin and the likes would have been really consolidating a lot of the smaller players in this market while everything's a bit beaten up, and like and I'm going to go into it later about the thematic. Like, if they're in uranium, they've got this long-term belief. I would have thought they'd be snapping up a lot of smaller ones to scale instead of going for this is a pretty big whack. But who knows? This might pivot Paladin. It's just an interesting one. It's that, like, between the permitting over there and the build, and then right next door to next gen, and like it's just an interesting one.
Why don't you get into your thoughts from
one more comment on just that? Do you reckon like, while the deal's been live, and like, I know both shares have sort of trended lower, but do you think anyone has maybe picked up like a 5% stake in Fission while you've had this deal liquidity that maybe wasn't there before, that could have some strategic interest as well and would naturally vote no, sort of? But
if they picked it up after the record date, they wouldn't have a vote, would they?
No, that's correct.
Yeah. When was the record date in relation to when the deal was announced?
Maybe a month after.
Okay, so they did have obviously time. Yeah, quickly.
Yeah. So the record date was July 19th, and we spoke about this deal in June.
Yeah, yeah. God, would you ever know who it is? Unless they...
Eventually.
Maybe in time.
Yeah, maybe in time.
Yeah. Matty, get into your thoughts on WNA, the big uranium conference.
I'm waiting for that to happen, Trav. I like it. I like it. God, hopefully that'll pop up at 1:30 tonight.
Yeah.
Possibly. The good old WNA. So apparently it was the highest attended in history of WNA, highest amount of people there, which is interesting on the back of, and I'll show the charts later of how, I guess, the equities and everything have just been so hammered in the recent months in uranium, but the bulls are still bloody. It's very interesting.
It's probably because you've talked about it a few times on the podcast, Matty. It's the reach.
Oh yeah, probably they're like what if this dickhead's? I'm like that Uber driver moment. they're like if he's this Aussie bloke that's talking about it, that means we're at the top. That's could be well true. The big couple of comments like around like India and China, like with their outlook to eventually replace coal with nuclear, like China aiming for 150 gigawatts of nuclear by 2035, 200 gigawatts by 2040. So that's like, 8 to 10 reactor builds, which they've been doing per year. And, the thoughts around China being a bit opaque on what their inventories are over there, who would have thought? They do have a lot of uranium inventories, but, talk that they will be a net buyer of uranium to obviously you can't have inventories feed that many amount of reactors.
So how much is going to come from Kazatomprom?
Well, and that's considering, Kazatomprom's output is, as known, to be much lower than previously anticipated with what they've just released. And the big chunk coming out of Budanovskoye all going to Russia in the first 3 years, then half of it goes to Russia for the remainder. So big question is...
Does Russia just on-sell it to China?
Yeah, God, they could. Yeah, who knows? But China are and it's all around... If you've got all that going to Russia, you've got China wanting so much uranium. We haven't even got to India yet. When will the Western utilities outside of that sort of start really getting active in that contracting cycle because you've got those two big powerhouses taking such a big chunk of what's coming online over there. So that was the talk leading into it before as well. And like India, they're planning to triple nuclear capacity. I think they're going for 18 to have reactors in development by 2030, 18 700 megawatt reactors. But the different ones about these are these pressurized heavy water reactors. So they don't require enriched uranium, like their fuel rods are with natural uranium, different to the conventional pressurized water reactors, different, that's what uses enriched uranium. So they're a different style. I think the question is around supply post 2035. So because you look at that, I'll bring up the chart, Kazatomprom's growth and everything based on if they don't start adding projects, like everything, so a lot of it gets depleted by that 2035 point. And then obviously you're waiting on your Arrow and all that to hopefully they're in production by then to fill a bit of that. But there's a lot of question around just, discovery, permitting and construction of like what's it going to look like in 10 years' time. So, and then around the data centers, which we talked about head back and have a listen to that bloody episode last Friday with Alex Turnbull. Rip snorter. Data centers, apparently 2.2 trillion to be invested in data centers globally between now and 2030. 5 years, $2.2 trillion.
Was there $32 billion in the air trunk deal the other day?
Yeah, there you go. There's a little bloody 15th of it. But then, as we've talked about before, the whole thing about spot and term, apparently, term price is said to be still rising, even though equities have been hammered. Term price is said to be rising. Contracts being done at around $85 a pound. Some contracts being considered by producers to have no floors or ceilings. So that's saying if they're confident the price is going up long term, they will take the risk and put no floor in the contract to have no ceiling in the contract. So if it goes down, they'll have to the producer. Yeah. So that's That's sort of where it's sitting there. And you look at, I'll bring up the comparison here about how the equity's been hammered in the recent few months. Like the Aussie producers have been hammered the most, Boss and Paladin. They're down over 40% in 3 months. The ones in North America and that, Cameco, Fission, Encore, Denison, NextGen, UEC, all down around 27 to 35%. You see like Fission was up a bit around the Paladin merger, but dropped considerably since mid-July. Sprott Physical Uranium Trust, ding, ding, ding. I'll do hold a little bit of that. No, hasn't been hammered as much as the equities. That's only down 14%. But like end of last week, because everyone's talking about WNA is the big catalyst and everything, equities continued to get hammered while WNA was on, and then Spot actually dropped 4% on Friday when the spot price actually went up slightly. So there, and you see on the chart here, their discount to NAV went down to 15%. So WNA wasn't this room full of everyone bloody buying uranium equities and friggin' Spot and everything, but yeah, but you can see how much the equities more have been hammered compared to the physical uranium trust. So it's yeah, it's just where I think the comments were around like, the utilities will the utilities reach that point where they're like, because I think they sort of maintain the power to the producers with the like, you know, negotiating the contracts and everything. But will there come a point where they're like, fuck, we need to take action and really start contracting and get it? And that's going to be that sort of commencement of that contracting cycle, including like the replacement rate of the uranium, like contracting to replace the inventories and everything. So it just hasn't happened yet, but it's all, you know, there's definitely more there's definitely more bulls out there talking about it than bears talking about it. So you've got to be obviously very cautious of letting all that chat. Bloody, there's people that are on both sides. It's just the more publicised ones on the platforms are all the bulls.
Yeah.
So,
I mean, I'd say most people just don't care about the day-to-day movements that were at the conference, right? They're all in it for the long term. If you're a producer, if you're a utility, you're looking at the longer term trend. That's what you're caring about.
And the spot prices, as we said, so thinly traded, kind of not irrelevant, but the term price is what is the bloody driver of all of uranium, because that's where all, whatever it is, 80 or 90% of the pounds are done. They're in the term market.
Well,
so
like you've got, it sounds like, you know, for the most part, there's like the thesis is still intact. The equities have been like hemorrhaged, and I mean, it's like those sorts of environments that get, you know, certain types of, you know, investors interested, right?
Yeah. It's just one of the, it always just it's the interesting question all the time is like, and it's probably the same. It was the same with copper, I believe, when this copper thematic, and it's still going on now, like that, the copper thematic and the global shortage of copper and the need for copper and all this, like that's been around for what, friggin' 3 or 4 years now. And it's
ages. Yeah.
Like since the whole, the green revolution, like, and we're still at bloody what, $4 a pound or whatever. Like even that hasn't taken off yet. So like these structural supply deficits or whatever, they can be there, but it just doesn't mean everything's going to go up. Copper's a great example. But it might at some point.
The term market has just kept itching up though, hasn't it?
Yeah.
Like that's like in the 80s now, isn't it? Yeah, firmly.
Yeah, so, and but the equity's just bloody smashed. I've got to go next year to WNA.
Yeah.
Right up my alley. Pretty much, I'd say in the interim, the Australian equivalent of WNA, Drill 24.
Oh,
that is,
yes.
Wouldn't you say that is probably the closest thing we've got in Australia at the moment to WNA? Next
ADIA.
month, October 15 to 17. Bloody, mate, it's the drillers WNA. You think of, if you replace all the uranium fuel buyers and bloody producers and everything in one room, you replace them with drillers, the drilling equivalent, that's Drill 24. Oh,
Mate.
I cannot bloody wait. Ticket in the show notes in Perth, 15th to 17th at the Convention
I'm
Centre.
pumped, mate. You know who has the best word on the decline? The bloody drillers.
Drillers, mate.
They're
Oh,
closest to it.
geez, you want to go and make money, go to ADIA. Talk to some
Go to ADIA. Like, mate, find out the best service providers.
You'll be wall crossed all day. I can't bloody wait. I reckon it's going to be the highest amount of GCs per square foot contained within one room in Australian history.
That's how all conferences should be measured.
GC per square foot. Yeah. Oh,
Just off the charts.
Mate, I'll tell you what, if you're a mining business out there that likes sending invoices to drilling companies, this is the hunting ground for you. Get your ticket. Go make some money off some drillers.
Go ADIA.
What more do I have to say?
I'm excited.
Get your tickets in the show notes. We're going to be there. I can't wait. Right, boys, Perseus Predictive.
Last one from me, Matty. Yeah.
Up to bloody 20%.
Yeah, basically 90.9. And I just thought I'd talk through some of the interesting deal mechanic stuff to just have a bit of a chin wag. On Friday, there was this news. Perseus's stake in Predictive went up to 19.9%. You guys saw that. Ali covered the initial investment really well about 3 weeks ago. Perseus, as we know, proven African gold miner. Predictive, the sexy undeveloped project in Guinea. Remember back when, Ali covered the initial 13.8% investment, there was also this other 3.5% economic interest that Perseus had via these cash-settled equity swaps, leaving them with about 17% total interest. Well, in order to get 19.9% of Predictive Perseus, they unwound those swaps. They've picked up some more shares by executing these share sale agreements and some on-market kind of transactions as well.
So would have they been like block traded or something? The swap would have traded into, because they would have owned the swap. Like
the swaps were unwound.
The beneficial interest.
Yeah. The swaps unwind via these, off-market transactions, and then there are these further transactions with specific substantial shareholders, not too dissimilar from what was done with Jamie Boyton 3 weeks ago. So throwback to when Perseus picked up the first big stake from Jamie Boyton, and it is there was this share sale deed kind of attached as an annexure to the change in substantial notice, and Ali talked about the interesting provisions in that deed, which basically left Capital Drilling, which is Boyton's sort of company, and his entities with some upside if Perseus came in with a takeover offer at a premium to that price, before the 31st December 2025. He got this 50% profit share on any uplift, and was granted the option to buy call option shares as well. So so in the change of substantial that went up on Friday, lodged by Perseus, I wanted to see if there was any similarities or differences with that initial share sale deed and those kind of profit share things. And they all had the exact same kind of mechanisms: the same profit share, the same call option, the same expiry date, and importantly, the same purchase price for the shares being 21 cents. Now, in the disclosure that Perseus put up, you can see the maximum price Perseus paid for shares is that 22 cents. So from the documents uploaded to date to ASX, I get the impression that Perseus is being pretty damn diligent about managing their entry price for this pre-bid stake. You can see on Predictive Spark chart that the shares shot up to 29 cents in the first few weeks after Perseus announced their initial stake. So it sort of saw up there from the 15th onwards. But, Perseus, they didn't keep buying their stake as the share price rose. They waited for the share price to drop, which it did. There was this, some uncertainty popped up around Guinea's permit processing. So the share price fell off. And that's when Perseus bought more shares. As we sort of, saw on Friday, they paid the same price as the initial stake. So it's now Perseus has got 19.9%, and it's paid as high as 22 cents a share. And you guys know what the read through is there. If they've been pretty thoughtful about not increasing their price paid for shares.
Want as much money in the bank to spend it on something? Is that what you're saying?
I think it's all about my read through is that they're probably likely to try and wrap up 100%, in the not too distant future, because there's the whole rule: you can't lodge a takeover offer at a price lower than price you paid for shares in the last 12 months. So I think it's all about whatever offer comes. It's going to be referenced as one of the metrics they'll use to sort of talk about whatever premium is offered will be a premium to the 22 cent sort of last like entry price that they've got, or 21 cent entry price. So
make the deal.
I think Perseus is going to try and get a deal done for 100. Whether what mechanism they'll use and whether they'll have kind of an agreed deal on both sides or not, like all of that's TBA. But my interpretation is they're motivated to get a deal done, sort of and then maybe even by the end of the year, like TBA.
They're growing.
Jeez, that'd be pretty unreal to see within 1 year take Allcorp and Predictive.
Yeah,
like that's
I love their work cut out for them.
Yeah,
yeah. Well, they can prioritise one over the other. You don't have to do both at the same time. But
growing in the Ivory Coast, development projects into other countries and stuff. Quite the operation.
Yeah, right. Do you think once they get to that stage, do you think Perseus would be attractive to a big African-focused international miner ever? Once they consolidate or once they got this going, like I don't even know how big they are, like Endeavour or like Anglo Gold or like, don't know. That'd be huge. That'd be huge.
I think Perseus have one of the, like when you bunch all the gold miners up and stuff, like they've got like some of the lowest realized kind of costs of any of the the gold miners out there. Like it's a portfolio that if those sort of costs are sustainable over time, that it's an enviable thing. Most gold miners want to lower their like average costs via an acquisition, and I imagine it makes sense for a lot of them to want Perseus if they're comfortable with the mines and assets and exposure.
Yeah, I don't know. How big's Endeavour? I might have bloody. I don't even know if they're freaking bigger than Perseus.
I've got 6 or 7
really big
in my head.
Yeah. There's other ones.
What's Perseus's market cap?
3 odd.
Sure, I haven't seen it. Fucking stupid.
Yeah.
6.7 billion is Canadian.
And Perseus is 3.2.
Oh, yeah. There you go. Sweet. They're twice the size. Yep. That's what's going to happen.
It's like,
you heard it here first.
Yeah. It's like B2 Gold's got a lot of Africa, but I think they're trying to get out of Africa. And
sold an asset in Kiaka and whatnot. So
good to see. Good to see some activity in good old Africa. Your home, JD.
My home. Yes.
This is the home of Axis Mining Technology.
It's also
like the second office.
It's also the home of MMS, VRIFY, ADIA. Get your tickets.
Get your tickets.
VRIFY, DSI Underground, Silverstone, CRE Insurance, Greenlands Equipment, K-Drill, and use the Spark Chart.
Get them India. Hootaroo Money Miners.
Hootaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.